Good morning all and welcome to another one of my videos. I have two pairs on watch today. Those are Euro Dollar as before and Dollar CAD. So I'm going to break them down for you now and I'm going to give you my thought process as it comes to me, and hopefully you take some value from this video today. So Euro Dollar. We know, those of us who have been watching my videos previously, why I'm looking at this on the higher time frames, but as we get down to the lower time frames, the lower time frame structure, which obviously evolves as the days go by, I will give you my thoughts on that as it starts to evolve and any anomalies or things I notice in there which have changed and how I interpret that. But without further ado, let's break these pairs down. So Euro Dollar. On the higher time frames, we have this 1, 2, 3 touch structure with fairly equal spacing. If I just measure these touches in a non technical way, in a very loose way, it's fairly equal spacing between the touches. That is a positive confluence factor. We have a 1, 2, 3. Price taps into the last exchange of liquidity, okay, that I can see on my chart. So as I said yesterday, with this 1, 2, 3 wave move, that tends to imply that the move has completed. This pattern, this 1, 2, 3 has completed. So when it lines up with a 1, 2, 3, that gives me a clue that this move has completed, and that it doesn't necessarily mean price will reverse. That something else will occur at this area of value after the completion of a pattern. Okay, one of the things that is most likely to occur when we have an exchange of liquidity, and it's the last exchange of liquidity that we can see. If we look left at the price action, a reversal is much more likely in that area if it is this last exchange of liquidity, as opposed to price correcting sideways, forming a new structure and then pushing lower, and then we have this 1, 2, 3. Okay, hopefully that makes sense. So it's no surprise to me that we pushed up aggressively here. And what we are looking for on the higher time frames is an impulse correction continuation to push higher. Okay, because this correction would be proportionate for a move up, proportionate to this impulse up which has preceded it, which is quite important as well. However, as I have touched on before, when we move up in an ascending structure, it doesn't mean that these can't break out to the upside. These can be running channels, and we can indeed we can have a running channel like this, and then afterwards we get a kind of something like this, but we would usually see that on at least the 4-hour time frame, because after a move up like this and the completion of a pattern, price typically needs to build volume. Price is either finding volume or it's building it. So price would need to build volume for the move to the upside to occur, and we didn't get that. You can see we completed this pattern, we pushed up and pushed back down, and one of the reasons we likely did that is because we had near misses down here. Okay, so we had a low which came close to that low and didn't quite tap into it, and we had this low which came quite close to this wick and didn't quite tap it, giving me a clue that there was a lot of liquidity in these areas which hadn't been tapped into, which is why price is coming to the downside. The other one is that we had a series of near misses here to this high, to this exchange of liquidity, which just so happens to be, the back end of this piece of structure, which price needed to tap into to find the liquidity to push lower. Okay, so what we typically see at these highs, particularly these higher time frame highs, we usually see price break above and then break back in, because the news, the narrative in the news is usually, says things like, oh, euro dollar reaching, where were we, 1.5-year high or 1-year high, which encourages FOMO, encourages people to buy the highs, buy what they believe is now support because price is broken above it, meaning that it's apparently not resistance anymore. Well, let's test the theory, shall we? People start buying, and bang, it comes crashing to the downside, which is what we see the majority of the time. And there was even a clue in there that might happen as well, because we had this 1, 2, 3 wave move. There was another clue in there. They're giving me a clue that this had come to a completion. within this 1, 2, 3 wave move, within this 1, 2, 3 touch structure. As I've touched on previously, when we break out of a structure, we actually quite like it when the structure falls just shy of the liquidity point, because that causes confusion and panic. People see it break out, they think it's going long. A lot of people are too zoomed in, so they don't actually see that we're trading, that they're getting long straight into an inflection point such as this. So many people would have seen it break out of this structure, got long, not realizing that they're trading straight into this. People believe this is now support. They start trading above it, and then it comes crashing down. There was also another clue, because typically speaking, within these structures, the last leg tends to be very impulsive. And if you just take this structure as a whole, okay, if you just look at where was the most impulsive move, I would argue, you could argue that there was an impulsive move down there, but I would argue that the most impulsive move was this one here. So one of the things that we typically see at the end of a piece of structure is an impulsive last move. So we've got that as well, and that is typically just people getting out of their positions. Okay. So what we typically see is something like this. We see these tighter flags, and as we get up, the flags tend to get a bit tighter. You can see that there, and then bang, we come crashing to the downside. So the first thing I ask myself, as always, is, am I well positioned for this move down to what we call the 90% rule, the start of a piece of structure? Am I well positioned for a move down to there? Well, I would say yes. As I've said before, if we extend that trend line out, we're below that. We're trading below here now. So I think I'm well positioned for a move which would likely take out this, complete the structure, and because the structure happens to fall just shy of a hook point here, which is very sharp, and when they're sharp, that implies that a lot of orders were placed down there very quickly. The orders were filled, and then we push back up. But obviously, there's going to be stop losses in and around that area of the swing traders, and that is a place where a lot of people who understand that a sharp hook point means a lot of liquidity, likely where they would place limit orders. But typically speaking, at the start of a piece of structure, even if price does tend to uh, reverse or correct sideways to push lower, price tends to stall in these areas, because obviously it's a good profit taking area for people to take profit. So the next thing I asked myself, I'm well positioned. What was the sequence like? The sequence is good. We have the push down, tight flag, larger flag. Price takes out the liquidity here into the smaller, into the larger flag, into the smaller. And as I've said previously, we often get these smaller flags within the forming continuation within these larger structures, because the liquidity has been built up in the larger flag. So therefore, price does not need to correct for as long to for the higher time frame direction to continue, if that makes sense. So I like this one. We are trading below here, so the sequence is pretty good. It's a corrective wave, but that just adds fuel to the fire that the longer term direction is still in play, because typically speaking, we see a corrective wave if we're going to get that impulse correction continuation to push higher on the higher time frames. So that kind of ties in as well. Now, you can see we're contained within this range, and we do have to be careful, because the wider these structures get relative to the impulse down, they start to become more neutral, meaning that an impulse correction continuation, if they get too wide, starts to become less likely, and we typically see price break to the upside. However, I'm not concerned about that at the moment. In terms of this move down, impulse correction continuation, this still looks good for the sell. Now, if you remember yesterday, I was analyzing, one of the things we do, those of us who trade the Falcon strategy, is we analyze the nature of price. We don't just look at where price, which direction price is moving in. We look at how it actually moved there. And I said to you previously, I've just cut through this wick because it doesn't make sense in terms of the structure. It looks like a volatility wick. If you look at it, it happened at 2 a.m., which is Asian session, which is not typically when the liquidity comes in. So that gives me a clue that it was just a volatility spike. It's a wick on the 4-hour. It's a wick on the 2-hour. It is a wick on the 15-minute chart, which it doesn't really make sense in terms of the structure. So we just cut through that when that happens. And we got, if you look at this yesterday morning, we got to this area, but I said to you that we'd already tapped into this high, and price had tapped into it twice, and then it started to move down correctively, and more corrective than this impulse came up, giving me a clue that there was not enough liquidity here to send price to the downside. So I said to you, another thing I said is because we kind of near missed, if there was not enough liquidity here to send price to the downside, then where is the liquidity? It's likely the back end of this, where we have two sharp moves, okay? So if it near missed that and it tapped into this area multiple times, and then we pushed down less aggressively than we moved up, because typically speaking, we push down with the same aggression as we pushed up. That gives me a clue that we're likely, I said, going to move down correctively. If you watch yesterday's video, we'll likely move down correctively. And I thought that CPI, which happened at 1:30 p.m., you can see the time at the bottom of the screen, 1300 hours. That's 1 p.m. UK time. I thought that CPI, this might move down correctively, and then CPI might give us the volatility we need to push price up to the area of value where we could be looking to get short. Well, I was almost correct in that. Of course, we don't know what's going to happen in the market, but we did get that corrective move down, which is what I was anticipating. So a potential impulse correction continuation to take us up to that area, where I would then be looking for that impulse correction continuation to get short. However, once again, price didn't quite tap into that area. So we opened here, the volatility kicked in, it pushed up to this area, but then closed back down. So it didn't quite reach the area of value. So once again, what I'm going to be looking for, because we've had that impulsive move up and a corrective move down, we could push all the way back down to here to fill the wick. That often happens. We could fill the wick before pushing up to the area of value. And if that happens, I will not be looking to place a trade. But we do have more economic data, I believe, coming out in the European Union and the United States this afternoon, which could be, once again, the catalyst to take price up to the area of value. So if that happens, I will once again be looking for price to tap into this area of value, the back end of the previous structure. And if that happens, given how wide this is becoming now, and given that it's not that easy to identify with the first, second, and third touches, is starting to become more of a fourth touch. Okay, and in such instances where we get a fourth touch, I always wait for the push down and the flag rather than trying to call the top of the structure. So if we tap into the area of value, I'll be waiting for a push down and a flag. That gives me a clue that we've washed out all the stop loss orders that are sat above here and all the limit orders. And if we get an aggressive move down followed by a flag, then I would look to get short either on the break of the flag or within it, and then I would easily be able to manage it down to this trend line, just in case we come back again. I don't think once we tap into there, there's any reason for price to come up again, because it will have washed out all the orders. Okay, whereas at the moment, there's most likely still orders sat above there. So that's what I'm going to be looking for. If that alert does not trigger, then I will not be looking to place a trade. So moving on to dollar CAD. So dollar CAD, why am I looking at this one? On the higher time frames, if I just auto scale it, so on the higher time frames, I'm not too concerned about this. We do have a kind of 1, 2, 3 touch structure, which near misses here. That is a slight negative confidence factor, given that I would be looking to get long. We do have a negligible near miss to this high here, but it's so negligible that it's not as standout as this one here. We do have but we have a completed structure. We have a 1, 2, 3 completed structure. We have a push up, impulse correction, continuation. Now, this is very wide relative to the move up which preceded it, which is a slight negative as well. But once we start to push up, the structure becomes a little bit clearer to me. Okay, so we have a sharp hook point where there's likely a lot of liquidity. We have a move up, but we have a very aggressive pullback. Okay, we have a near miss to this area here. Then we push up, and then as I drill down, you'll see that we have a 1, 2, 3, another near miss to this area, which taps into it, grabs all the liquidity. But then we do something which price sometimes does, typically on corrective pairs, as I've experienced, and pairs like euro pound. But we have this 1, 2, 3 touch move, this one middle section, impulse correction continuation, which taps into that area, grabs all the liquidity. But then sometimes we see this scoop double bottom. Okay, so we see it move up, it comes back down, grabs the orders that were here, and then we go. Now, one of the negatives about this, and one of the reasons that this is lower on my list, is that we have we start with a corrective move up. Okay, we don't normally see these larger structures, which normally we will see the tighter flags into the larger flags, as I've just showed you with euro dollar. But in this instance, we start with a larger structure, which kind of becomes a running channel, which then pushes to the upside. However, after that, we get continuation. And the important thing is we're trading above this high, just in case this was an impulse correction continuation to push lower. We're well above that now. Now, one thing we do have to be mindful of is the fact that we have these highs. We have a high here, we have a near miss to it, and then price breaks above and then pushes down. So this could be a move to push lower, but it doesn't really make sense to. Where's it? I always ask myself, where's it pushing to? Well, it doesn't. Well, I don't understand why it would need to come here again. It's done what it needs to do. So this to me just looks like an impulse correction continuation to push higher, especially since we have this standout near miss to here. So which would complete this 1, 2, 3 touch structure if we were to push up. Okay, it would be an impulse correction continuation, and we would have this potential completed structure there, which would line up with that, and then this becomes a middle section in that overall structure. But just because we have broken above this high and we had a near miss to it, I'm going to be a bit more careful with this one. Okay, especially given that given that the sequence isn't the best because of how it started. Okay, so do I believe I'm well positioned? Yes, I believe I'm well positioned for the long. Do I believe the sequence is great? No, I've seen better sequences. So, with all that considered, and what I've just said to you in mind, so we do get the tighter flags. We get the tighter flag into a slightly larger flag, tighter flag, larger flag, into the tighter flags, then into the larger flags, and then we see this larger structure, which is, I haven't actually checked this, but this is what I was anticipating. We do tend to see these larger structures about halfway. Larger structures about halfway between a move. Okay, so if that's the first part, and we're looking for that move there, it is. This makes sense why we would see a larger structure, because they do tend to be in the middle of a move to complete that impulse correction continuation. Okay, so what I'm going to be looking for today, I'm being mindful of the time, because of all things considered, this may not be ready by the end of the day. You can see we may push up to the top of this and then push lower, and if that was to occur before we reach this area of value, that would be a lot of volume built up. Okay, so if a lot of volume builds up, say we get something like this, something like that before we push down to the area, then I'm not going to be looking to get long there because of the amount of volume that would have built up. But if we just trickle down to this area, because of the size of the structure and the sequence, I will not be looking to risk entry this from the bottom. But if we tap into this area here where there was a sharp move, and you can see we have this structure here. If we tap into the area, push up, I will be looking to get long. I'll be looking for a flag. I'll be looking to get long either on the break of the flag or within it, and then I'll be able to manage this even to the first inflection point for something in the region of 4 to 5%. Of course, that's dependent on the size of the flag and indeed the size of the impulse as well, as to whether I will even take the trade in the first place. But that is dollar CAD. Obviously, if euro dollar starts to push lower, then and the DXY, as it looks like it's going to do, if the DXY pushes higher, then we would likely see strength on the dollar against the Canadian dollar as well. So that is my forecast. As I say, if both of these were to shape up at the same time, I don't think that would be likely, but if they were to, then I would 100% be taking euro dollar over this pair, and that's why you see the pairs ranked as they are in my main focus list today. Hopefully you've enjoyed this video, folks. I will be back tomorrow, which will be Friday, if I have any pairs on watch. But for now, have a great day, and I will see you again soon. Thanks for watching.